You're continuing to watch our coverage here from Davos 2025, and now to talk to us about what the outlook is like for the banking sector back home is Amitabh Chaudhry of Axis Bank. Amitabh, many thanks for joining us here on CNBC-TV18. Pleasure to have you. Before I talk to you about India, what are you picking up on in terms of the big takeaways from the change of guard in the US and, of course, all the other mega trends that will shape 2025?
Well, I mean, obviously, US is a hot topic given all that is happening in the last 24 hours, so everyone seems to be talking about it.
Yes.
But over and above that, obviously, some of the obvious things about you, I heard you taking the previous interview, and I heard about the AI, and obviously people are talking about how AI could change the world. Climate risk is still very much a part of the agenda. All of us are suffering it and kind of seeing the impact of that on a regular basis. They are, I mean, also the headline for Davos this time is about collaborating in this
intelligent age.
Intelligent age. I don't know, it is intelligent people collaborating in this new age, I don't know, but collaboration is becoming important because I think you're almost seeing a clear sign where unilateralism is what every nation is going for. It's every nation for themselves. So the collaboration needs to be more. People need to come together. We have a lot of conflict zones. They have a lot of global macros which are not necessarily talking about any form of collaboration whatsoever. And over and above that, with some of the things which Trump is talking about in terms of immigration and trade sanctions and whatever that might be, will have, at least in the short term, a pretty big impact globally. So, a lot of things to watch out for. And as I keep saying, we are in the risk business, so just looking at more risks out there.
Well, let's talk about the micros and let's focus specifically on what's happening with your business in India. 15-quarter low for you, both in terms of advances and deposits. What's hurting the business?
So, well, as I said, we are in the risk-taking business where RBI is very clearly giving an indication that we want you to manage a certain credit deposit ratio. At Axis Bank, we've also been very focused on ensuring that we get the right customers and right kind of deposits and do the right things for the long term. So, yes, I mean, we could easily demonstrate a slightly better growth.
So you're saying that this is slowing down consciously?
So the deposit growth in the third quarter of this year was 1.4 lakh crores against 6 lakh crores on an average. To just show deposit growth, offer higher interest rates out there on the margin and just, show a number is not the right thing to do. Secondly, we don't focus on the quarter-end numbers. We focus on the average balances, and there our deposit growth was 13%. Our advances are linked to deposit growth. So the moment kind of deposit growth comes down, advances will come down. We are seeing incremental risks on the retail side, so we have to be cautious. At the same time, we continue to invest in our platform so that when the growth comes back or when the risks settle down, we will be back with the bank. We are very optimistic about what India presents. We keep telling people that please don't look at us on a quarter-quarter basis. Banking is not about a quarter. It is about building long-term relationships, signing up customers for the long term. So it will come back. I don't think we are worried about that. But yes, in the increment, if you have to manage the risk, it means that you have to take some hard calls. We'll take those hard calls.
So speaking of the hard calls, do you believe you've taken the hard calls, or will you perhaps need to take more hard calls, which will then reflect in the numbers in the near term?
So Axis Bank, we believe, has one of the most aggressive provisioning norms in the industry. So for us, on the unsecured side, which we provide for 100% within 90 days, that is not the norm followed by a lot of the banks, including some of the banks who are bigger than us. So in that sense, whatever is happening in our portfolio, we are recognizing and kind of provisioning it away very, very quickly. So yes, as things stabilize and as the stock continues to get better and better, you will see the growth come back. You will see, obviously, the elevated slippages come down. It's the next quarter, the quarter after that, well, only time will tell. But we are quite confident that with the kind of book we write, the kind of underwriting we do, the kind of customers we have, it should not be a long-term phenomenon. But yes, we also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side because they're all linked. And we have to be watchful of that. I mean, I don't think we should be just gung-ho for the sake of being gung-ho. We need to be watchful. And I think that's what we're trying to share to the market, that we are not going to lose any opportunity to grow, but at the same time, we have to be watchful of what risks could potentially emerge. And that's exactly what we're doing.
You just talked about the transference of unsecured to secured on the slippages side. Slippages have also been at a 13-quarter high for you, so it's not a 1 or 2 quarter phenomena. So do you anticipate things getting worse before they start to get better?
No, I think they've already stabilized. If you look at our numbers, the numbers are already stabilizing. See, we've gone through a period where the credit costs in India were at a historical low. And we talked about the fact that this will stabilize. So I think you're going through a cycle, a little bit of stability. You've also seen the Indian consumer over-leveraging themselves in some case quite rapidly. So I think that also is getting normalized as we move forward. And obviously there have been some macroeconomic or macro measures being taken by the RBI in terms of controlling some of this unbridled growth. So I think all these factors have played. It's a high after a certain period of time. We are still way below our long-term averages. We believe we'll be at the below our long-term averages, and quite confident about that because we know what we're underwriting.
But what about private capex, Amitabh? What's the sense that you get on that front at this point in time? You said you're bullish about the India story, but in the near term, what does it look like?
Well, till now it is basically the government which has been supporting the capex story, and the private capex is still quite slow. I think it still will take some time to come back. We are hopeful that the private capex should pick up because you are seeing some sectors of the economy where investments are seriously taking off, real estate being one example. I mean, manufacturing, we're seeing some investment, but it has been slow. And when you go and talk to the promoters, they are saying that I will be careful about where I invest. I'm not going to do just these large projects for the sake of doing it. I need to be careful. I need to be watchful. I don't want to over leverage. We have learned the lessons of the past. And by the way, we also need to realize that the corporate profitability has gone up. So there's a lot of cash flow being generated by the companies, and they're obviously using that cash flow to invest rather than kind of borrowing from the system.
Yeah.
So private capex hopefully will pick up, but we've been talking about this story for at least last 12 to 18 months, and we keep saying the same thing every quarter. But this time I think the tailwinds look slightly better. I think government also realizes that because they have kind of reached the capacity in terms of what they can invest. So if private capex does not pick up, I think it will start becoming a bit of a problem.
So 25, if I were to ask you for a headline, likely to be a better year for Axis Bank in terms of numbers as well as reclaiming market share?
Well, our numbers will keep moving up. Even this year, in spite of the elevated, let's say, credit costs, our profitability will be higher than that of last year. So it's not that, we are kind of going down somewhere. We are continuing to move up. The pace of movement up is slightly slower. I think it should pick up in 25, 26, but subject to some of these things stabilizing. I mean, we are aware of the fact that there is no liquidity in the system. The deposit, growth is slow. There are elevated levels of stresses. Rupee has depreciated. So there are some factors at play which could impact this growth going forward next year. I'm very hopeful that RBI is obviously looking at all these factors, and they've already started, everyday auctions on VRR.
Yes.
They know they need to inject liquidity into the system. They know that the credit growth has come to a point where it started hurting the GDP growth to some extent. So I think they will take steps, and they will hopefully look at measures which will kind of revise some of this growth. And if that comes through, then yes, 25, 26.
So outlook on rates and the rupee, expecting a rate cut in February, and where do you believe the rupee is likely to be?
So my view is rate cut really going to spur the economic growth? I'm not so sure. I think what the system needs more is liquidity back in the system. One, secondly, deposit growth to pick up a little bit. We also need some of the macro, regulations which RBI has brought in or is talking about bringing in. RBI to kind of, sit back and think through as to how they want to implement it and when they want to implement it. For example, if they implement the LCR, kind of the draft guidelines as the way they exist, we are talking about 5 to 7 lakh crores being taken out of the system. So it will have an impact. So my view is that on the rate cut, they might do it to give a signal, but is it going to spur economic growth? I'm not so sure. As far as rupee is concerned, I think obviously a lot of money has been spent to defend the rupee, but there is a kind of a dollar play going on, and I don't think it's going to end in a hurry. So just keep spending the reserves to defend the rupee might not make sense. They've already kind of let go of it a little bit. And my view is that I think now the current dispensation, the government would be that let's just ensure that the depreciation does happen. But on a kind of a certain basis rather than just trying to hold the floor. It's not going to work.
And that is what Raghuram Rajan had to say when he spoke to me here this morning as well. Amitabh Chaudhry, it's an absolute pleasure. Many, many thanks for joining us here on CNBC-TV18. We wish you the very best for 2025. We are going to take a break here. There's a lot more coming up. We'll be joined by Sajjan Jindal right after this. Don't go anywhere. We're back in a moment with more.